Hello everyone, welcome back to the channel. In today's video, I want to do something I've never done before, something very interesting. Last week a student of mine asked me if the smart money concept works for all kind of markets like the stock and crypto, and well, I said yes, and we went through some stuffs, but something came to me, and I started thinking, since a student of mine is seeing the smart money concept this way, that means many of you guys out there are also thinking this way. So I have an announcement at the end of this video, so make sure you watch this video till the end. Okay, uh let's proceed. So I'm going to be picking two random pairs or two random markets as crypto and also stock, which I have never in my life looked at. And we're gonna do a full top analysis what I see, why I'm seeing it that way. And so let's just go to crypto tab. I'm already there. Just get rid of this. And just look for something really creepy. Let me take this. Never looked at it before. I'm going to be doing a multi-tab full top-down analysis. Starting from a weekly or monthly down to the 1 minute time frame, if I could. So this market doesn't have much details actually. This is just a bunch of consolidation giving us this. So far, remember, this is when my three rule based system comes in now. I've got three rule based system. And my first rule is structure, liquidity, and bias, directional bias. So first we look at structure. So currently structure is printing this way. This move up, this move down, this move up, not going above this, and it's now trying to push below. So this is what I'm expecting. This is what I'm expecting this mark from the far. This is what I'm expecting from the market. This is an impulse corrective and an impulse. So that is what structure was telling me. So we've got structure now. So let's just use three rule based system. Okay. Rules one is actually structure, liquidity, liquidity, and so there is and bias. So let's just take care of this for the meantime. This is what we're looking at now. So those are my. This is just number one. This is the first rule: liquidity, structure, liquidity, and bias. So structure is like this. Is just this. It's clearly telling us that yeah, it's a downward trend, and I really respect that. So how do I look for liquidity? Liquidity, since it's a downward trend, liquidity is the lower low, and this is the lower low. So shh, let me just drag this. So that is actually liquidity. So let's just get rid of this. Let me get rid of this and put it on my protection. My protected high is this high. So now we've got a monthly spiders range. This is a pair I've never traded, never looked at it before. I'm just doing it with you guys right now. So the least you can do is to like and subscribe. If you're already a subscriber, fine. But if you're not, then what the hell are you waiting for? Subscribe and smash the like button. And if you like my content, tell me in the comment below. If you don't, dislike it, but still tell me why. So this is what I'm saying. And we've got this pretty and we've got this spiders range here. So this is my spider's ring. So let's go deeper. Fine. So this is what I do now. From the liquidity to the protected high, I, I still want to see what structure is doing. So this I keep repeating everything. I keep repeating the same thing in every single time frame. You're jumping. So you know the reason why I'm using the part two. It's because it's really important to me, right? So this is actually a microstructure. Remember, we've got two types of structure: the macro and microstructure. So this inner term structure is the microstructure. It's micro, it's small, and this was how it was playing. Liquidity protected, and every liquidity was being run until everything changed, and this big boy got smashed. So this was an icebreaker structure. Oops, what's wrong? So looking at this leg, this upward leg, this was supposed to be a protected low, and it's the price just traded through. So that means this sorry, it's valid. This makes it a valid breaker structure. And now, what do we look for? The last up move before the down move. And this is my last up move. Let's make it blue. I know you might be wondering, why am I using the week? This is not how you were taught. But this is not what you were taught about all the blocks. But we will see. And we might want to adjust this a little bit. So as you can see, this is the last up move before the down move. Exactly. So I actually messed up a little bit. But you might be wondering, this is really big, right? So this is the idea. First, this is what I do when I've got a very, very large POI. I tend to take the 50% of it. Oops. Just 50% of it. And still go deeper. So now we're just looking for a valid POI because we want the market to trade back in and, smash this. And sometimes it won't. But, I'll still try, right? So things are becoming quite more interesting. So this is an SPO. I don't want to refine it more deep. So this is quite a big area. So what we just this is where you observe price. Let's just enter. This is uh I've seen many smart money gurus do this mistake. Sometimes when a PO as big as this, we just put your pending orders and the stop loss above here. This is too big. I only use pending orders when my trade is refined to like a 1 minute candle. Would you do a very small? It's so small, so that's why I use pending orders. But for a POI as large as this, man, it's no way. I just have to wait and see what is happening inside the POI. So we've got this breaker structure, and the market hasn't traded above there, and it needs to because we've got shitty ton of imbalance here, resting here, and no, this already filled out. So this is where we see imbalance. So this POI might not be as valid as you think, but yes, this imbalance here, it might not be as valid as you think, but this might hold this POI here. So that's why for you need to have multiple POIs, multiple point of interest. You never know which old block will hold. There's no 100% guarantee on that. So that's just trading for you. So everything else has been slimming down until you know start seeing buyer's momentum. That's uh, a beautiful break structure. So I'm trying to give this a story. I just don't want to jump into conclusion here. I'm analyzing in story mode, giving it a story. this is what happened and this is why this is happening. So that's how I like to analyze narrative. Narrating is narrating. So let's move. And this was the big structure. This big structure we've got, wow, tons of imbalance here. Sorry, I said imbalance. Tons of wood blocks. It's wood block here. So there's many wood blocks right now. So we don't know which one we hold. And they are so small. So sometimes I go to the higher time frame and look at this leg and see what I can do there. Because on a higher time frame, it's more summarized, right? That's how it works, right? On a higher time frame, it's everything is summarized and much more easier to understand. So I hope this loads. So I'm coming. Oh yeah, I just go to the daily time frame and see what I can do. And because it's more summarized in the daily time frame, as I said, and things will be more quite clear. So so far, this is the only unmitigated order block, and we still want the price to trade inside the zone. Then continue to maybe this valid POI above or this one above. So that's our expectation. That's what I'm expecting, and that's quite a long way for it to go. So lo and behold, this is a protected low. So let me just label it, and this is the overall equity high. And in a smaller version, I've got this widest range, so you can see. So all right, I want this market to trade inside my zone and observe price from there. So right now there's nothing to do because it hasn't yet entered my zone. Oh, and I don't want to refine this where I don't want to. So this is all, and this is alright. I feel guilty. So let me just check that. Just look at it. Like, well, for real, there's nothing to do here actually. So I just want to see maybe shift in structure from in a lower time frame, and there's nothing. It's because it hasn't yet entered my zone. So that is legit everything. This is how I trade. This is how I look at it, and you see how perfectly a smart money concept work for. That's how I analyze. So I want to use live price. I don't want to use the replay tool because it's hindsight. So I just want to do something review. So let's go to the stock market and see what is it for. So stock something very show me what is wrong. Oh, sorry. So let's just do something. So just do something I like. So let's use oil and gas. So you might think I know that. Let's use something. Oh, Netflix. I haven't looked at Netflix. So we're gonna start from the monthly time frame and see what's happening and see what we can get from it. So this is a monthly time frame. So the idea of smart money concept is just that you don't need plenty information, you don't need many data to actually analyze. So just a little bit of data, you know what to do. So lo and behold, this is Netflix, and it's obvious this is an uptrending market. So understanding structure of place, everything is just it's just dashing up, and maybe a deep pullback inside this demand zone here and move or into this full into this last demand zone, which will make it a full mitigation and it will smash. So we don't know what will happen. But clearly it is an uptrend and we've got a protected low, right here. Yeah, and liquidity pool, protected swing, liquidity swing, and we've got the yearly spiders range. So yeah, we got this range. Perfect. So let's go deeper and see what has happened from the protected low to the liquidity point. So there's there's actually displacement price. Remember, this is the micro structure. The first structure we looked at was the macro structure. This is now a micro structure. So in this pool, push, move to the outside, and I want to see displacement and price coming downwards and just smashing to this level. This is what I expect. This is what I want to see right now. Yeah, and this is what will most likely than not happen. So why do I want to enter right here? Because we've got this perfect support or resistance that was violated. Price is traded through. Already seen fading price in the buyers, and the sellers are willing to come in just for a short period of time, just for a deep pullback, coming back inside this demand zone, and it shouldn't continue to move upward. So let's go to a daily time frame. In a daily time frame now, what I'm looking for is actually in my front. So this is what I like. This is why I come. Remember, this is all perspective based. I'm not a financial advisor. So yeah, I'm not a financial advisor. So let's go deeper. Sorry about this. Let's go deeper to get a nice look. So this was was actually printing this way. The push up protect the liquidity pool, liquidity swing, protect the swing, liquidity swing, protect the swing, liquidity swing, and a smash through this protect the swing. So let me get your eyes in there. So where's the last up move before the down move that broke structure? This is it. This is the last up move before the down move that broke structure. And you can see how it's perfectly held. You can see how it perfectly held, and you actually want to sell this for people that sell. Did I just say sell? Trade, actually trade the stock market, and I guess Netflix is valid for buys. This is all perspective based. Don't take my advice seriously. Well, like serious, I don't know. I'm sorry. So yeah, let's just do this. So this is my own opinion. This is what I just go back to a much more reasonable time frame. Back to daily time frame. So if this is to run, this is a nice 1 to 14 because if I'm a stock trader already be in this market right now, I would just sell. And stop loss will be above this high if you don't have, but but this is for big banks. That's what I'm saying. If I'm a bank, if I'm the bank right now, just enter and my stop loss will be up there. But we're retail traders, so stop loss just above here, and you want to catch odds small. This is a 1 to 15. 1 to almost 15. So yeah, 1 to 15. So this is everything. Smart money concept really works for any market in as far as there's somebody who has most money, somebody who can control the market, a composite man. Well, a composite man is still the smart money. This is why coffee and Thames. It has been over for about 100 years. So you know Richard Wyckoff, you know him, right? If you don't, I guess you should go to Google and search Richard Wyckoff. Perfect. See theory. So if you just go read about him, and also you want in depth about Wyckoff, because it's actually easy, but most mentors are making it difficult for people. And this is not something you need to bother yourself about. That's Wyckoff. You can just go read about him and his stance, how he trade, and the picture perfect accumulation distribution we use currently in the smart money concept. The PS, primary supply, bias, seller scammer, automatic value, secondary test phase B, last point of supply, and last point of supply, sign of strength, and stuff like that. And distribution phase, because institutional phase is primary supply, bias slammer, automatic value, secondary test, sign of weakness, UT, which is the upper trust, the UTAD upper trust after distribution, then the test, the last one supply, then sign of weakness. So this is just it. Just go through it. Make sure you read every single thing. And don't worry, I'll be dropping videos on Wyckoff and many other things. So I've got listed videos for you guys. So make sure you have a blessed week. I really appreciate if you're watching this video until up until now. I really appreciate the support. But don't forget to hit the like button, make sure you subscribe, and tell me the kind of content you want me to record next time. And I really appreciate it. So I love you all. Bye.